The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the October 24th, wonderful Wednesday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, the easiest way to do that, it's to always remember that life is happening for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we get to go check out the circumstance of these markets. We get to go figure out, if we can figure it out, what the bulls and the bears, what the buyers and the sellers are communicating to you and I just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, and more importantly, I'm here to serve you. So feel free to pick up that phone. Dial on in, 877-927-6648. If you can't dial in, we got you covered. Send me an email. Send it early. Send it to Steve at TFNN.com. Inside that subject heading, please put radio show question. And in the Tiger's Den, well, any ping will do. So let's go ahead and get this show started on wonderful Wednesday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes. Welcome to Lush Show. Right now, the Dow trading up off 206 points. 24,985 is the print. S&P's down 35 points, 1 3/10% to the downside. Trading out at 2705. Nasdaq 100 off 143. Russell down 25. Semis are off 46. That's almost nearly 4%. Tranny's down 155. So it is mean and red to the downside. It's mean and green to the upside. 10.5%. One-day rate of change thus far in the spot volatility index. That's trading at $22.89, up $2.14. Goldilocks is off $6. Silver down 8 pennies. Light sweet crude trading up nearly $1 at 67.39 and trading up to the upside. Leading the charge dollar-wise, it is with $23.74. ETF SER Solutions, DSTL. Now, it looks to me, because it's up 2,373% out there, maybe today's the first day of trading. But Market Taxes Holdings, Inc., that's up 8.88%. That's a good luck number, 8.88. $17. MKTX is the ticker symbol. AutoZone up 13. Lithium Motors up 11. Boeing up 10. To the downside, it is Booking Holdings or Priceline down $39 or 2%. Amazon off 43. Google's off 22. Netflix down 19. Plenty to look at. Of course, I want to look at what you want to look at, which is what? There are no questions in here. So let's take a spin on the in the markets, try to figure out who's going to communicate to us first out here. Now, I will not be able to be with you tomorrow or Friday. So it's important for me. I'll give you some numbers to pay attention to. If these things break, then it's going to tell you what where the next leg of the market is. Now, we're going to look at the equity futures contracts first, but I know many of you don't trade those or really get the data feed for that, but you should. But that's a different story. I think that the Russell 2000 is probably the one to give us the next biggest clue out here. Now, the reason I say that is each of the equity futures contracts yesterday, they formed a nice hammer candle. It's not just the fact that it formed a hammer candle, it's where it did it, how it did it, when it did it, because timing is everything. And it did it right as the beginning of a Rhodes momentum indicator signal was forming. This happens to be the daily contract for the Russell 2000. And you can see that the lows of yesterday are being attacked out here. If this hammer candle fails, which means a close below it, let's give you the exact number on that, if I can. That would be 1500.20. So that's the level to be watching. We're at 1501 right now, 1500.7. And it's a closing basis. So we know support. Yesterday's low is support. We know that, one, because of the candle formation out there, market trying to hammer out a bottom. So that is being tested right now. What happens if it's tested and it holds? Tells you support has held. Close below it says, well, okay, maybe. Now, that doesn't mean that the pattern goes away, because it will just continue at this stage, but it won't have that bullish reversal signal. Likewise, if it does hold, you see the Russell 2000 equity futures contract close above. Right now, the figure I'd give you would be 1548, called 1544 to 1548. Then that tells you, and I'm not talking about today, and it doesn't even have to be tomorrow. It could be Friday. But if you see a close above that, then that would be an indication, okay, bottom's up. Yep, bottoms would be in. Now, in the case of Russell 2000, she's got resistance at 1594. Clear that in its more upside action. But right now, the focus is on the low of yesterday, really at the end of the contract session. Now, why is it the Russell 2000 is the one that's going to give us that piece of information first? Well, maybe because it's going to be the first one down there to test that low of yesterday. If we take a look at the ES Mini, you can see it's got a ways to go. Same candle configuration. Tells you it's a strong bottoming signal, right? As a Rhodes momentum indicator pattern is beginning to form. And that low is going to be 26.92 and 1 tick, a quarter. So 26.92 and a quarter is the level to be watching inside of the ES Mini. Likewise, to the upside, you need to see it close above 27.77 would be the number. That number would change, you know, tomorrow and Friday, but you can use that as your gauge out there. Just think 2, and then the slot machine, 777 out there. You see it close above that. That says bottoms up. If we take a look at the Dow equity futures contract, Dow's trading down 221 points right now. Futures are down more. But if we take a look at it, we can see that price is not near the bottom of yesterday's candle session, or the bottom of that hammer out there. Now remember, the interpretation of a hammer is the market is trying to hammer out a low. Do all hammers work out there? The answer is no. How do we know that? Well, we can just simply look at a chart out here. This is why you don't just trade candlestick signals, nor do you just trade patterns. You must, you must use both in order to get the valid, proper signals to tell you that the cavalry has arrived. In the case of the Dow equity futures contract, October 8th was a nice little hammer candle. Now, that was just kind of appearing, so to speak, out of the blue. There was no pattern that it completed on October the 8th. And it was 2 days later, once price got below that, that's where you saw that little waterfall, that trading session from October 10th out there. And so you know the expression, if you close below the low of a hammer candle, if you are long, you are wrong. And that's going to mean you're going to head down to the next level of support, wherever that might be. Now, in the case here, the TAS market profile, the bottom of its box, held as support yesterday, 25.077. What's the upside action number out here? Is going to be 25.549. That's what you'll want to be watching. Now, in the case of the NQ, why did Stevie leave that till last? Only because it was the last one to look at. But the other reason is because it did not generate a Rhodes momentum indicator bottom pattern out there. But we did get that hammer. And that says the low of yesterday is muy importante. We can see that today, the high in the NQ was a test and rejection of Stevie's red line. There also lies a piece of information. You see the NQ close over Stevie's red line, right now 71.65. That'll tell you it's up, up, and away. To the downside action, you want to watch 69.44. That's the low of yesterday. Steve Rhodes with TFNN. Dow's off 215. S&P down 37. We'll be right back. I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools, as well as provide great market calls too. Sign up today.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance, David White's daily market letter, gives you trade recommendations based on David's proprietary Power Law Vector indicator that put the odds of success overwhelmingly in your favor. He'll give you the entry price, price target, and stop price for each stock and option trade. David combines his years of trading experience along with his background in technology and computing to offer his subscribers his take on the markets on a daily basis. Every trading day by 9:30, David publishes his morning issue of The Path of Least Resistance, along with updates sent out throughout the week whenever there is new actionable trading information. All new subscribers receive a 30-day, no questions asked money-back guarantee. To sign up for David White's daily trading newsletter right now, visit the front page of TFNN.com and you'll find the Path of Least Resistance under Trading Newsletters.
Call now, toll free at 1-877-927-6648. Internationally at 727-873-7618.
Welcome back, folks. So Larry writes in, Larry C., and we sort of covered this, but we'll cover it a little bit further for each of you out there, especially since I won't be able to be with you until next Monday. So Larry C. writes in, he says, "Hey, Steve." Hi, Larry. A follow-up from yesterday's show. Do you see any Rhodes momentum indicator bottoms still forming in any of the four major ETFs, the diamonds, the Qs, the SPYs, and the IWM? And so I do, and let me just give it to you, give it to each of you out there. Let's go ahead and put Stevie's black box system up on the screen. So this is always scanning for different indices or ETFs or individual stocks and letting us know what's going on. And here we're just taking a look at the major indices, Larry. So here you can take a look at the Dow, the S&P, the NASDAQ, the Russell 2000, the semis, the transports, the composite, the New York Stock Exchange, Russell 1000, 3000. The New York Stock Exchange, it's international top 100, it's U.S. top 100, the Wilshire. You can take a look at the Dow Diamonds, the SPYs and the Qs and the IWM. They're there. And if we go from the diamonds over, what we're going to see, and it's kind of highlighted a little bit blue for you, you'll see bottom signal. And today's action is actually somewhat bullish. Now, many people may not want to see this. What do I mean by that? It's a good question. What do I mean by that? Let's go ahead and bring the Dow Diamonds over here just to, I guess, prove the point. What do I mean by that? Now, remember the Dow Equities Futures contract showed a hammer candle yesterday. That is not what the cash indices showed. That is not what the diamonds showed out there. What you see is a green candle yesterday. That green candle just simply was telling you where the open and where the close is. Now, the fact today that we have a red candle just tells you where the open and the close is. But to the extent that the candle finishes today's close finishes lower than yesterday's open, what it does then give the opportunity for, it gives the opportunity for a bullish reversal candle to form tomorrow. So actually, today's action, as long as price doesn't take out those hammer candle lows, is actually potentially a gift. Remember, everything in life happens for you, not to you. Once you understand that, then you can find the gift in any set of circumstance that life is going to toss at you. What you and I do is we go take a look at the circumstance of these markets. And the circumstance of yesterday, Larry, would have been if we would have seen upward momentum today, and we still may, But let's deal with what we've got at 1:20 in the afternoon. Then we really wouldn't have, we not really wouldn't, we wouldn't have, unless there was a gap to the upside, and there wasn't, we wouldn't have any type of bullish reversal signal. Is that important? Yeah, I just said it was important during that first segment out there. Now, the other thing that's important here, so today's session in the pullback, I know you bears don't want to hear that, and I know you bulls don't want to hear that. That means basically nobody wants to hear it unless you believe that everything in life happens for you, unless you can understand the gift in every set of circumstance. And this would be the gift. Because if the signals yesterday were that the markets are forming a bottom out there, then actually this is the action you would prefer to see out here. The secondary action, Larry, with regard to the diamonds is going to be 255.32. Price is going to need to close over Stevie's red line in order to go ahead and say, okay, we're ready to go to the upside. Now, you see you got that same level out here. We take a look at Stevie's red line. I probably should have named it that, but it just says daily oscillator unchanged resistance line. Those are the levels on the chart right now. You don't have to write them down. You can go watch the replay of this on TigerTV later on. These numbers will change a little bit as price moves up and down, but they're a really good guideline. And so what we can see out here is there's bottom signals all over the place. Everybody's trashing the financial sector, the XLF. They're just trashing it and thrashing it, except for the fact that it too formed a bottom signal out there. Yeah, and the Russell 2000, the 1000, 3000, all thousands of them actually did. So that's what the markets are communicating. They haven't confirmed it. They've just given us signals. But that's helpful in trying to understand and time the markets as to what the message of the markets are. It just makes it easy. We can get rid of the emotion and just read the emotion of the markets out there. Why is that important? Because these patterns that form bottoms, you and I looked at it yesterday. We went back to what, 2003 or something like. When did we go back? We went back 13 years, 15 then. 2005, right? In the ES Mini example here, and do all hammers work? No, here's just hammer candles out here. But Stevie's red line, Stevie's patterns, yeah, they work. Do they work 100% of the time? No, but they allow us to understand when there's failure. But they work really well, really, really well. Take a look out here at the trading day of February 10th, 2003. Kind of like today, except not like today, except like today. Prices moving lower out here, and you get a nice little hammer candle on February the 10th. And what happens the very next day? Price moves up and finds resistance where? At Stevie's red line. Deflects it back, price moves back, price closes underneath the low of that hammer candle. Got to sit patiently, got to be idle out there. But then what happens if you're idle? You get that next Rhodes momentum indicator signal. Yes, it began on March the 7th, but it didn't confirm until March 12th and March 13th. March 12th was the signal. What did we get there? Nice little hammer candle. What did you get the very next trading session to close above Stevie's red line? So fast forward to where we're at today. Yes, I've got the continuous contract up on my screen so that I could go all the way back to 2003 and show you a similar type pattern out there. And you can ignore it if you want. And I know you, Mr. 666, stop sending me those emails. They just go into my trash anyways. I'm just not interested in that. I'm not. But here's what we can do. What we can do is we can take a look at yesterday's hammer candle in the ES Mini. Make sure there's not a close below that low, and then watch tomorrow's candle session and Friday's candle session. And if we see a close above Stevie's red line, it tells you you've got your change in trend. Otherwise, any move up to it is nothing more than a counter trend rally. And that is what we know. I think the NQ and the Russell, probably the two best ones to pay attention and look at. So, Larry, I hope that answers your question. It's going to be the answer to your question for tomorrow, Thursday, and Friday. All right, so what else are we going to look at? Probably we should go take a look at gold. Nobody's written in. I take that back. We do have another question. You send in an email, and we're going to We're going to go take a look at, this is from, who is this from? George. Okay, George. George says, Steve, I'm looking to buy SBGL at 258. Let's go find out what SBGL is and see if we can help George out here. And he's looking for a good entry point. So that is Sibane. I don't know. How would you guys say that? Or you gals say that? Here, I'll spell it for you. Sibanye. Stillwater. I can get the second name. In any event, the ticker symbol is SBGL out here, and you're looking for a good entry point. So here's what we're going to do, because we're getting ready to go to a break, and no reason for me to try to do this in 15 seconds for you. So I'll go ahead and get all my charts set up. We'll take a look at this Stillwater Company. We'll come back and try to give you our best entry point on SBGL. Right now, we got the Dow trading down about 219 points. S&P down 37. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den. The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of the TFNN shows, plus see all of the charts as they happen live, and have access to archives of all of those charts. You can test drive the Tiger's Den absolutely free for 30 days and greatly enrich your knowledge of these markets and how to make your money work for you. Details on the Tiger's Den are on the front page of TFNN.com.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today. TFNN has launched our brand new website. You can still visit us at the same TFNN.com URL, but when you do, you'll see a new and improved homepage with a much simpler navigation, whether you're watching TigerTV live in high definition or just accessing your newsletter subscriptions. We even have new pricing in 6 months and yearly options. Check out the new TFNN.com now and experience all the upgrades. TFNN.com, educating investors.
This segment is brought to you by Thinkorswim. For more information, just click the Thinkorswim banner on the front page of TFNN.com.
Welcome back, folks. So we're taking a look at ticker symbol SBGL. It is a mining company in in Africa. Actually, I don't, maybe it was South Africa. I don't recall. And what we can see with regard, and George is asking for an entry price on this, and we can see that it made a bottom on August the 17th. If I just flip over and take a look at when gold made its bottom out here, it was August the 16th. And so we know that this is trading in conjunction with that. So really, to answer your question, George, right now what gold is struggling to do is to get above its resistance level, which is 1236.90. So if it can't get above that, maybe gold is going to pull back. It could pull back as all the way back to 1216.50, and there's nothing wrong with it. That's the bottom of its box out here. So to a certain extent, I think you've got to be paying attention to both. If you see gold close above 1236.90, then the entry price, or the entry point, was probably today, as one possibility. If we take a look at this equity right now, it's pulled back this week, which was yesterday, today. It's pulled all the way back to the top of its weekly profile, which was $2.94 out here. But the problem is gold is struggling to get above resistance, not because traders of gold in euros or yen or pounds aren't buyers. They are. It's your friends out there. It's your friends here in this country that aren't doing their role, because the role is being done for the traders sitting over in London. It's certainly being done for the traders sitting over in Paris. And the guys over in Tokyo right now, they're kind of snoozing. They said, hey, it's 1:30 in the morning, I'm going to go to bed. But it did, gold did make a higher high today in that currency. We didn't get that same thing here. So I didn't give you a really great entry point, because you're going to have to time your entry point with regard to what's gold going to do. So in essence, that is your entry point. Let's go to Kansas and speak with Tim. Tim, thanks for calling. Thanks for holding. How are you today?
I'm very good, Steve.
Nice to hear your voice.
Wondering if you can give me any good news about Dow DuPont, DWDP.
Yeah, is it? You're in it? You looking to get in it?
Well, I used to work for them. I worked for them for 30 years, so I've got stock that dates back probably 30 years. So
got it. Okay.
Yeah,
okay.
I have a little.
Well, so you want the good news? Oh boy! All right, so let's see. Hey, I'm gonna call it like I see it out here. It looks like it's gonna. Okay, I'll give you the good news. You're a longtime listener of TFNN, and I know you admire and appreciate the work that Basil Chapman does, as do I. And if Ken, if we take a look at the high out here from the trading session of August 29th, and we start doing our wave count to the downside, it's currently in wave number G, or wave number 7 out there. So that always has potential for an eventual turnaround. But that wave can continue to extend. It's been in wave number 7 or G for the last 2, 4, 5 trading sessions out there. But if you're looking for good news, that is probably all the good news that I can find on this equity. And what I mean by that is, if I take a look at just logical levels of support, and that would be daily, weekly, or monthly profiles, it's trading below all of those levels out here.
Yeah, it's had a tough month.
Yeah, so what we have to do then is kind of look for, we have to look for some type of sign of strength out here. And the sign of strength, in essence, that we have is up at the high volume bar on December 7th, 2015. There was 135 million shares on a weekly basis. You're only at 41 there, but it's really not, it's a swing point to the upside, which is kind of unusual. Usually we're looking for some type of volume bar to the downside to identify support out here. Let me switch over to the monthly, just see what sticks out, if anything sticks out on a monthly basis. And on a monthly basis, what I would note would be more like the candle session of August in 2015. So not too bad. So this thing is likely, if the 7th wave move doesn't slow its momentum to the downside, and that means you'd have to see a higher low tomorrow or the next day in order to finish that wave number 7. If that doesn't stop it, then this is likely headed to 47.58, maybe even 46.81. You know, it's in a monthly A to B equals CD to the downside, and it's already confirmed, and the month is not over. And so I can give you price projections there, and the price projections here, it's already done the 1-to-1. It's on its way to the 1.272, which is 51.82, and the 1.618 is 46.35. Now, the good news is when it's completed its move lower, what it's going to do, it is very likely going to form a Gartley buy pattern and probably do so on a monthly basis. So this is nothing more than just a normal retracement off of those lows in 2015, had that nice run up into the January of 2018, and now it's just in an A to B equals CD formation to the downside. It's just I don't see where that is going to take place just yet. Does that help you as far as what I'm seeing?
Well, and they're going to split it up into 3 companies sometime next year.
Okay.
So I don't know what that's going to do to it.
Well, you're going to get three times the amount of stock.
Yeah.
You're going to get you're going to have 3 companies.
I spoke to you about a month ago about Ford, and you told me to
Did
wait.
I have anything good to say about Ford?
What are you looking at that to do now?
Yeah. So let's take a look at Ford Motor Corporation out here. And as we take a look at its daily, weekly, and monthly, it too has kind of got the uglies. Are you in this equity as well, or looking to?
No, I never have owned it.
Yeah, but you have owned a bunch of Fords. In fact, you owned a Model A, didn't you?
Yeah, I did.
Yeah,
you got
I
a good
remember.
memory.
Yeah, I remember that. So in the case of Ford, in trying to find a bottom on a daily, right now it's just consolidating. It was a brand new profile that formed out here. And if Ford was going to make some type of move higher, what it would need to do, Ken, is close above 887. We haven't seen Ford close above the top of a box out here for about a month now. September 24th, so exactly a month, was the last time we saw a closing above that level. So 887 would be a key area on a daily basis to at least have some type of counter trend move. Now, this thing has made just a series of A to B equals CD patterns to the downside. Let's look at the longer term for you, the monthly chart out here. Let's just see what this thing is going back against. And this thing being Ford, this is really bad. Bad from the standpoint that July of 2012, the low there was 883. And in a handful of months earlier, in October of 2011, the low was 905. And right now for this month, if we close below those lows out here, there's no support until you get back to the 2009 levels. Hard to believe, isn't it?
Yep.
I mean, that's the dollar. I remember sitting in a bar in California, and there was a guy, we were just talking about the markets, and it was in the March 2009 timeframe, and he loaded up on Ford at the Buck area out there. And, and I wasn't smart enough to do what he did, because when that moved up to 18, I was like, that's a heck of a trade. I'm sure that guy is out of it now. But hey, maybe you and I were going to have that opportunity again. Hard to believe, but if this thing closes the month below 883, there's not a lot of support in this equity until you get back down into the 2009 timeframe.
Okay.
Bill Ford's not doing a very good job with the stock. I think he needs to bring back Mark Fields, and I'm going to tell him that when I see him on Friday. Hey, Ken, nice to speak to you. Nice to speak to you. Have a great day.
All right, you too. Thanks, Steve.
We'll be right back, folks.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A Share Bull and Bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. Jason Path has just launched his weekly newsletter, The Quantitative Edge, available only at TFNN.com. Right now, you can sign up for Jason's outstanding weekly report, including midweek updates whenever warranted, with a 30-day money-back guarantee included, so you have nothing to risk. Jason develops his trade recommendations by creating an ensemble of predictive and mathematical models trained on data by leveraging a variety of techniques, including market-based computer simulations. Jason then combines these sophisticated predictive and analytical models with deeply researched macro outlooks to identify opportunities in a number of different markets for traders to act on. Whether you're looking to trade futures, equities, commodities like crude oil and gold, forex, or cryptos, Jason covers it all. Sign up for Jason Path's weekly trading newsletter right now by visiting the front page of TFNN.com, and you'll find the Quantitative Edge under the Newsletters tab. TFNN.com, educating investors. No matter what kind of trader you are, 2018 is a great time to try out a subscription to Tom O'Brien's Gold Report. Whether you just plan on diversifying your portfolio with some exposure to gold and gold mining equities, or you're a gold bull that sees 2018 as the year of commodities, now is a great time to sign up for the Gold Report. Tom O'Brien publishes his Gold Report every Monday morning before the market opens and covers a variety of topics, including gold, silver, platinum, copper, the XAU and HUI, the dollar, bonds, South African rand, as well as more than 20 of the most actively traded mining equities. Start your 2018 off with a bang and sign up for the Gold Report today. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. For all the details and to start your subscription right now, visit the front page of TFNN.com and you'll find the Gold Report under Investment Newsletters.
Don't forget, you can listen to TFNN live on your mobile device 24 hours per day. Go to TFNN.com, then hit Watch Tiger TV. That's TFNN.com, then hit Watch Tiger TV for the latest market information.
Welcome back, folks. Dow's off 220, S&P down 40. No questions on deck as we speak. So let's just take a tour around. So we've already taken a look at gold. So, not really much more to cover there. Really looks promising in other currencies. It's just in the U.S. where we're just not seeing it pick up any steam. You do have the U.S. dollar index. That's trading out at 96.20 right now. If we take a look at what the U.S. dollar index is doing, it's going to continue to move higher. But right now, what it has to do in order to do that, and then we've got up the December contract. We'll put up the continuous here in a moment. But what the U.S. dollar index is trying to do is get above its most recent swing point high, and that's at 96.45. That is from the trading day of August 15th. But I've got limited data here as we're looking at the current contract. So let's just put up the continuous out here and. Let's put this on a longer-term time frame, about a monthly time frame out here. And at this stage, what we know about the U.S. dollar index, it's making higher highs and higher lows. And the U.S. dollar index likely to head higher. That doesn't mean that gold won't move higher. That's an absolute total misnomer. Yeah, gold will move higher in all major currencies. That's in essence when gold is ready to bust out to the upside out here. Of course, right now we've seen gold take a breather because the high out here, if we look at a monthly chart, was back in January 2017. But it could be on its way if it can take out those highs from was it January, August highs out there. Could be on its way to making an A to B equals CD to the upside. That would actually take price all the way back into those January 2017 levels out here. Of course, this is what it would look like as we take a look at the monthly time frame chart out there. And only a 0.382 retracement, which says to me this would make a larger than a 1-to-1 A to B equals CD to the upside. So the U.S. dollar index eventually looks to me, not until it clears 96.86, of course, is the continuous contract, would it then head to 102.11, 104.48, and don't think that it's going to stop there anytime soon. So that's what Stevie sees when he looks at the U.S. dollar index. If we take a look at, I don't know, what do we want to look at? Treasury bonds. We take a look at Treasury bonds T-bonds, there you can see they're getting some juice in all the major currencies out here. You're looking at the pound sterling on the right side. You're looking at the yen next to it, and then we're going from right to left. Then you've got T-bonds in euros out there, and you can see that they're all at new highs today, new fresh highs today. Yesterday was a higher high, but right now what T-bonds in dollars need to do, very similar to Goldilocks out there, what T-bonds need to do is close above a level of resistance. That level of resistance is the top of its profile. The top of its profile is 138 and 26/32 out there. So far resistance, but if we see it close today above that level, then it's free game. Free game to head up to 141. That's a big move, by the way. That'd be a large move to go from 138 to 141. It won't do it overnight. I don't think it'll do it overnight, but that would be a large move inside of T-bonds. And as long as they continue to move higher in these major currencies, what it means is you've got traders around the globe that are buyers, not sellers out here. So that's what it looks like at 145. 145 doesn't cut it, and right now it's just trading into resistance, which has managed to hold ever since the trading session of October the 11th. So for a couple of weeks out there. If we take a look at the New York Stock Exchange, let's go just take a peek at it, see what it is doing out here. Now, in the case of the New York Stock Exchange, it has an interesting diverging pattern. It's making lower lows. What I mean by lower lows, I'm just really referring back to, because on a closing basis, means we're looking at the line chart from October 11th. So the top panel says we're making a lower low. If I take a look at panel number 2, that's the advanced decline oscillator reading out here. And right now, that is making a higher low. 1508 is not the correct number. I forget to, well, I can tell you what the number is because I calculated basically every day or every other day when I remember to do it. And the number of issues you would need in order to get to zero today would be 2162. That's not going to happen. But that's not really the point that I was trying to make. Remember, when you get down to minus 150, which is where we're at right now, minus 160, that's an oversold territory out here. And but it's making a higher low than that low from way back in October the 11th out there. Now, what you can do is you can pay attention to those other diverging patterns out here when the markets, the New York Stock Exchange being the market, so to speak, made a nice bottom, and there's no reason to believe that this won't do the same. And then we can go down to the bottom panel of the chart, and we can take a look at that spot volatility index, and it is also making lower highs, the same pattern as the prior two instances at major bottoming type areas. Now, you may have noted that New York Stock Exchange had one of those bottoming signals yesterday, too. So you know where Stevie's red line is, or go back and replay the tape when it gets posted onto YouTube, and you'll be able to see those numbers out there. And that would be the confirmation. But this is the setup in the wide swath of the market out there. There's no confirmation just yet, but it, too, is signaling to us that it wants to form a bottom. And on top of just simply Stevie's Rhodes Momentum Indicator, this has got three other elements that we can take a look at what it's doing now versus what it did in the past and what that meaning meant. Yeah. So that's the New York Stock Exchange out there. So what else can we take a look at? We can always take a look at the big picture. The old big picture, what has the Dow done so far? So far hasn't violated anything. What do I mean by anything? The anything I'm referring to is that green linear trend line that goes back to the 1985 high in the Dow, the 1987 high, which contained price in 2000. Yep, just kind of put a lid on it. And then what did we see? We saw in 2018, we saw the bullish breakout above that line. Actually, it was November 2017, the month of November. We saw a breakout above that level. Then all that we were doing in April, in February of 2018 was testing that level. And what price tried to do, wasn't able to do it on a monthly basis, was take out the January highs, 26, 616, 71. Yeah, on a daily basis, did it for a few days. But you and I, this is called the big picture chart. Therefore, the big picture chart has to close above that level with a big monthly candle session out there. So we're just consolidating. Price has also found support thus far at that old trend line. broke through it, came back, tested it, rejected it, went up to the high, said, okay, not just yet, has pulled back to that trend line. Now, maybe it could pull back just a few more dollars, but close enough for my workout here. And then the key will be when and if we see a close above 616.71, not 666, not in the cards. Anybody who thinks like that, I believe they're going to miss out on the trade of a lifetime. And I don't want that to be you. Let's just do this. Let's let the charts tell us what they're going to do. Let's just pay attention to the patterns and the signals. And that way, it's not me just narrating what the charts have done in the past, what they're likely to do in the future out there. And then you and I can best take advantage of it. These are cool tools that you and I use out here. Let's just use them, not abuse them. Dow's off 188, S&P's down 36. We'll be right back.
Hi folks, this is Tom O'Brien. If you'd like to be the bank and get the type of interest they receive instead of the low interest rates they give to clients, then I have an investment you may want to take a look at. I'm offering 4-year secured first mortgages on buildable city lots in St. Petersburg, Florida. The investment can be anywhere from $30,000 to $75,000 per buildable city lot. The interest paid is 7% per year, paid monthly. Depending on the investment, the income per month per lot ranged from $175 for a $30,000 investment to $437.50 for a $75,000 investment. If you are in the CD market, you want to look at this investment. St. Petersburg is located in Pinellas County, which is the densest county in Florida. If you're looking for an investment with your principal intact that pays a good interest rate, this may be for you. The supply is limited, so act now. For more information on these secured first mortgage opportunities, you can call me at 877-518-9190. That's 877-518-9190. Hi folks, Tom O'Brien here. If you'd like to get my daily newsletter, Market Insights, then now is a great time to sign up for a 30-day free trial. Every morning by 9:30, I send out my morning letter to subscribers with market commentary on a variety of markets, currencies, and commodities to keep investors up to date on the day's trading action. Included in Market Insights are specific buy and sell recommendations for stocks, ETFs, and even options, with stops and price targets included for every trade in my newsletter. If you'd like to try my newsletter risk-free for 30 days, then head over to the front page of TFNN and you'll find Market Insights under Trading Newsletters. I use my years of trading experience to bisect and dissect the market every morning and give my subscribers the most important information they need to know for the day ahead. I even issue afternoon updates for my subscribers whenever warranted with important market action. I'm always scouring the market for the next great trading opportunity. Sign up for your 30-day free trial to my daily newsletter, Market Insights, today by visiting the front page of TFNN.com. Wow! Go get 'em, folks.
I'm certain you are or strive to be one of the best at everything you do in life. It's the most common trait that we tigers and tigresses share. If you're looking to become the best of the best when it comes to managing your money, let me teach you to do what most wealth managers tell you can't be done, which is how to time the markets. I'm Steve Rhodes, author of Mastering Probability, and for the last 12 months, Timer Digest has been tracking my newsletter signals, which have earned me the ranking as their #1 market timer in the nation for the S&P 500 for the last 12, 6, and 3 months. Timer Digest also ranks me as the #1 market timer for gold as well. The fact is, markets can be timed, and I'll teach you the exact set of tools that I use that has transformed me into one of the best at what I do. Sign up for Mastering Probability today by clicking on the newsletter tab on the homepage of TFNN.com and get immediate access to workshops where I take you step by step how to use an extraordinary set of tools as well as provide great market calls too. Sign up today.
This is David White. Stay tuned because coming up next is the Power Trading Hour right here on TFNN.
Welcome back, folks. So no questions. Dow's off 175. S&P's down 35. The NASDAQ is off 157. Let's just do this here. Let's go back to, because I won't be here again with you. Won't be here tomorrow or Friday. We'll be back with you on Monday. And so let's just go back to, there's one possibility is the markets are trying to form a bottom. We know that's the signal that it is sent to us kind of in a unanimous type way. Now, what do we mean by that? We mean that when markets form major bottoms, they usually do it with that Rhodes momentum indicator pattern. And that's a signal that popped up yesterday, if you watch us on Tiger TV, for all of these indices. These indices being the Dow, the S&P, being the Russell 2000, the semis, the transports, the composite, the New York Stock Exchange, the Russell 3000, the 1000, the New York Stock Exchange 100, the International 100, the Wilshire 5000, the diamonds, the SPYs, the IWM, the XLF has fallen off, so maybe that's seeing a newer low today, and that would make sense there. So the key is that today is really can be a gift to those patterns out there, because yesterday, other than the hammer candles that showed up in some of the indices out there, the majority didn't have a bullish reversal candle. And tomorrow they now can, assuming that the markets finish, we'll say, in the red today. And that is the gift in that set of circumstance out there. We took a look, as an example, we took a look at the Dow Diamonds. Let's go take a look at the SPYs out here. And as we take a look at the SPY, what you can see is yesterday's candle. You see the beginning of that Rhodes momentum indicator signal. So that's in place. You can see today, called the bear sash candle. By the way, a bear and a bull sash candle, they don't need a trend in place, unlike a bullish or bearish engulfing or a hammer or a shooting star. So in this case here, just simply, if the session were to end like this, it would be clear that the market could form that bullish reversal candle inside the SPYs. The key, though, in the SPY will then be closing above Stevie's red line, 276.73 as we speak right now. Folks, have a great week, rest of your week, great weekend. I'll see you back on Magnificent Marvelous Monday. Take care, and thanks for being here.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletter.